All right, let's try this again, guys. Hopefully you can hear me now. Sorry, the video got interrupted earlier. So in case you started watching this earlier and it completely went away, I do apologize. I had some technical difficulties, but we'll pick right back up where I left off. As I was saying earlier, Credit Mondays. We're going to want to do this each and every Monday. I'd say this is probably episode 1 of hopefully many more, depending on the engagements, depending on the questions that are asked. I know that there is a lot of people that have concerns about their credit. And in my area of expertise, what we do is we help our clients identify where they can work on their own to help increase and boost their credit. So as I was mentioning earlier in my previous video prior to being interrupted, credit is a very important aspect and factor in our daily lives. A lot of people, credit is important for them when applying for cards, as well as maybe when purchasing vehicles. But in my area, in my realm, where I help folks with obtaining a mortgage loan, credit is critical. A lot of people don't stop to realize how important credit really is until they're actually in the process of purchasing their future home. So Chris, thanks so much again for joining. I'm sorry my video got interrupted. Yes, you're absolutely right. You got to love those video interruptions, especially when you're live, right? Brownwin, sorry, thank you for joining. I'm going to wait for a few more folks to join. And while we wait for folks to join, you can just give me a quick thumbs up. I just want to make sure that you can hear me. And feel free to drop a comment below. I've posted a few questions up on the top here, just to kind of trigger some interest, if you will. In my experience, I've had a lot of folks ask me, Roberto, how low can my credit score be? Or how high can I get my score to go? Or how long could it take before I see my score go from like a high 5 to even a mid 600? And so I'm gonna over the course of the next few weeks, I want to be able to help guide you and help you understand how you yourself, and not to say that these credit repair companies and agencies that are out there won't be able to help you do the same, but a lot of times there's a lot of things that you can do. It's just a matter of the legwork that you decide to put into it yourself. It can help save you hundreds of dollars if you yourself did it. So again, I want to make this a habit over the course of the next few weeks. So I'm gonna wait for a few more people to join in. And while they do that, I'm gonna go on ahead and maybe invite a few people. Chris, if you want to start a watch party for me, man, I really appreciate that. Chris is asking 3 credit bureaus. How do we know which one matters? That's actually a great question, Chris. And actually have that answer for you here. So I really appreciate you asking that question, because that's actually a question that a lot of people ask. There's a lot of credit agencies, there's a lot of credit models. And full disclosure here, guys, I am not a credit repair expert. I am not a credentialed credit repair agency or company, but I am a licensed mortgage loan originator. And part of our job really is to review and analyze our clients' credit reports, credit scores, credit histories, and be able to determine their eligibility to be able to purchase a mortgage loan. Okay. And while there's a lot of banks out there that will tell you that you need an X amount of credit score, or you need X amount of trade lines open, when you work through our firm, what we'll do is we'll be able to we work with several different banks and lenders nationally. We review your credit report, and to answer Chris's question here, we pull your tri-merge credit, because there's a consumer credit report, such as the ones that you pay for online through third-party providers, third-party companies. You've probably seen their commercials online, the Karmas and the Guards, and just to name a few. But when we pull your credit, it's not a consumer report. It's an actual tri-merge credit report. Yes, a lot of people ask, is it a hard inquiry? Absolutely, it is a hard inquiry. And I want to make a note of that. Hard inquiries, they do play an impact on your credit scores. But listen, guys, if your scores are weak as they are already, there's nothing for you to worry about. It's not like they're going to get any better. You know, you need to find out where you really are. And so the tri-merge credit report is going to help you, help us to be able to identify, you know, where and what areas we need to help you out at. So to answer Chris's question again, thank you, Chris, for asking the question of the 3 credit bureaus. Number one, the 3 major, because there's so many out there, but the 3 major credit bureaus are going to be Experian, TransUnion, and Equifax. Experian, TransUnion, and Equifax, right? And how do we know which one matters most to banks, right? So a lot of folks, they come to our firm and they say, you know, hey, Roberto, I heard that I need to improve my FICO, right? You know, I heard my FICO needs to be strong, right? You know, and so the first question I put up there actually was, you know, what is FICO, right? And why is my FICO important? Well, to be fully transparent here, you know, FICO is actually a model that Experian uses, right? So you have Experian, you have TransUnion, and you have Equifax. And so Experian uses the FICO model. TransUnion uses the Empirica model. Some of you may have heard of Empirica, right? Equifax uses the Beacon model. And so there are different banks out there, depending on what you're applying for, that will use either the FICO or the Beacon or the Empirica, you know, whether you're applying for a credit card or you're applying for, you know, a car loan. But when you're applying for a mortgage loan to purchase a home, we don't just go off of the FICO. We're not concerned about, oh, you need to have a strong FICO or a strong Beacon or a strong Empirica. We're going to look at all 3 major credit bureaus, the Equifax, as I mentioned earlier, the TransUnion, and the Experian. Okay, and of those 3 credit bureaus, what most banks are going to look for is the middle score of the 3. It doesn't mean that, you know, TransUnion is always in the middle, you know, because it's Experian, TransUnion, Equifax. No, it's the score, the middle score, not the median score, but the middle score of the 3. So I'll give you an example. Let's just hypothetically say your scores were, you know, via Experian you had a 600, and via TransUnion you had a 620, and via Equifax you had a 615. Well, 600, 620, 615. Notice how Equifax didn't fall in the middle, but it is your middle score. That's what banks, when you're applying for a mortgage loan, are going to look for, the middle score of the 3. Does that make sense? If that makes sense, please give me a quick thumbs up here, guys. And Chris, hopefully I've answered your question. You know, when it comes to the 3 bureaus, Experian, TransUnion, Equifax, right? Of the 3, the most important one that matters is going to be the one that carries the middle score. Does that make sense? Okay. And so a lot of times you're going to go to your bank, and every bank works differently. You know, some banks say you need to have a minimal credit score of, let's just hypothetically say Bank A says, you know, in order for you to get a loan through us, you need to have a 640 minimum. Let's say your particular bank says you need a 680, 690. Just because you went to your bank and your bank said you needed that particular score and you didn't meet the score. Let's just say the bank that you went to says 680, but in reality you have a 642. It doesn't mean you can't get a loan. Guys, you need to talk to a mortgage expert. You need to talk to someone like me or a member of my team that will be able to help you, because we work with several dozen banks across the nation, okay, that will be able to facilitate a loan for your unique situation. Heck, I've helped clients get a mortgage loan with as little as a 580 credit score. Yes, 580 credit score. Veterans with 580, 600, less than 600 credit score. Okay, just because your bank may have turned you down because you didn't meet their minimal credit score criteria does not necessarily mean that you do not qualify for a mortgage loan. Yes, you do. Okay, so 3 major credit bureaus: Experian, TransUnion, Equifax, and of the 3, the ones that most banks and lenders are going to consider is going to be the bureau with the middle score. And depending on what that bank's minimal credit score criteria calls for, that's what they're going to be led by. Okay. Jessica, thank you so much for joining. Guys, I appreciate you for joining. Hopefully you find value in this information. And, again, I pointed out some very important things. What's my credit score? That was the very first question that came to my mind, because that's the question that a lot of clients, when they come to me, they ask, Roberto, I asked them actually, I go, hey, what is your credit score? When was the last time you checked your credit? And there are several clients out there, maybe like yourself, who know what their credit score is and may be shy to say what the score is, because unfortunately they've been told that their score is just poor. It's not good. And perhaps that may be true to that particular institution or that particular professional that works for that institution because of their minimal credit score criteria, right? But as I mentioned earlier on, and if you're just joining me, not every bank is created equal. Not every bank is going to have the same minimal credit score criteria, okay? And so at the end of the day, I ask folks, I go, hey, what is your credit score? Okay, don't be ashamed to tell me, what is your credit score? Greg, thanks so much for joining. How you doing, man? It's been a while. And so, when I ask that question, a lot of folks, when they give me the answer, it's not necessarily because they went to their bank and got the answers, because they're being led by a third-party consumer credit reporting agency to give them that answer. And that's all fine and dandy, right? Again, as I mentioned earlier, you got your karmas, you got your guards, and the list can go on, right? And so at the end of the day, if you're working with a reputable, not one that invests hundreds of thousands of dollars to put their ads on TV and on the internet, but you're working with a reputable consumer credit reporting agency that's going to give you accurate numbers. It's going to give you all three, not just two, okay? Because there are some consumer credit reporting agencies that will only give you two. And as I mentioned earlier, when applying for a mortgage loan, we're not going to just look at one. This is not about FICO. This is not about just Empirica. This is not just about Beacon. And if you're just joining in and you don't know what these different models stand for, hopefully at the end of this video, you guys can go back and listen in. But at the end of the day, we're going to, most lenders are going to look at all three of the major credit bureaus. So if you're using a consumer credit report, something that you're probably paying for or maybe even getting for free, and they're only giving you two, and you're telling me, hey, yeah, my score is say a 628, chances are your score may be a little lower. And this is where a lot of people are misled. This is where a lot of people are misled, because a lot of people are led to believe that if they have a firm like mine's pull their credit, that their credit is going to significantly drop. Okay, and while that does hold some truth, it does hold some truth, at the end of the day, it really depends on where did you get your score information from originally. Okay, because if you're getting your score information from a free provider, number one, how accurate are those scores? Okay, and let's just hypothetically say, yeah, you got your scores directly from, I got clients say, well, I got my scores directly from Equifax. Equifax is telling me, and that's good, that's a reputable provider. But the scores that you got from Equifax, how recent were those scores? Because scores change on a daily basis, and it all really depends on when your last credit card balance, your last credit card statement, your last car payment was actually reported to that institution, and when that institution reported the card payment directly to the bureaus. And so at the end of the day, when we're looking at the scoring models, we want to be able to take into account how recent those scores actually are. So a lot of people are led to believe that when a firm like mine, say for example, pulls your credit, because it was a hard inquiry, the score drops significantly, and they get disappointed, because when we give them the score, sometimes the score may be slightly lower than what they had actually seen online, right? But again, it's because, as I mentioned earlier, be mindful, the scores you see online are a consumer-related score versus the scores that we pull are tri-merge related scores. And so that consumer-related score may not have been up to date, up to that current day's date, versus when I pulled your score, it's up to date. It has all the most relevant information. And while your scores may have dropped slightly, because I'm not going to say they're not going to drop. Yes, there are chances it may have dropped slightly. I can almost guarantee they don't drop by 100 points. They don't significantly drop like most people are led to believe. So what is your score? When was the last time you checked your score? And if you guys would like to know how to get some more information about how to actually monitor your credit, right? Monitor your scores. Drop me a comment below. I'll be more than glad to provide you with some free and valuable information on how I can help you, without me even pulling your credit, be able to view and monitor your credit scores. And this is through an unknown source other than what you've probably seen on TV and the most common name that you've probably seen on TV. Drop me a comment below, and I'll be more than glad to provide you, or give me a call. I'll be more than glad to talk to you and lead you in the right direction, because a lot of people don't know what their scores are, and a lot of people are afraid of having their scores pulled. Lewis, thank you so much for joining, man. How you doing? I appreciate you being here. And for those of you who've just joined, please drop a comment below, drop a question. If you have a question, I'd be more than glad to answer those questions for you. And Chris, hopefully I answered your question as well. So again, another most common question that most people ask, right, is how can I get my score to increase? You know, what's the easiest way to get my score to increase? And as I mentioned earlier, scores can either increase or decrease, and just as well as they go down, they go right back up. You know, just because you had your credit pulled and the scores went down slightly, as long as you're doing everything right, as long as you're doing everything possible to get your scores to go back up, there's no reason why within the next few weeks, if not sooner, depending on when your cards get reported to the bureaus, your scores go right back up, if not higher than where you were initially, right? And so I'm going to give you a free nugget here that I share with most of my clients when we get on the phone and we talk about ways to help increase, not just monitor their own credit, but ways to help increase their credit scores. And a lot of you may have gone online and done your own research, and you'll see how some credit experts might say, well, if your utilization is not greater than 50%, this is a great way to help your scores go up, because your dependency factor is actually less riskier than someone who actually utilizes their credit and depends on it. And that is true. The dependency factor, if you haven't heard of that, can definitely create a positive or negative impact on your scores, depending on how you utilize your credit, right? And what I mean by that is how you utilize the balances on your credit cards. And so I've read so many different articles, and you've probably done the same. You've gone online and you've seen how these credit experts will tell you, yes, no more than 50%. And while 50% is a good rule of thumb to follow, what happens is a lot of people fall into this trap where I'm not using more than 50% of my card. I'm paying as much as possible to keep my 50% balance right where it needs to be. But boom, end of the month comes in, or close to the end of the month comes in, and you've been hit with interest charges. And you don't realize how you've just gone above your 50% threshold, whatever that 50% mark was. If it's a $5,000 credit card and you're not using more than $2,500, or it's a $500 credit card and you're not using more than $250, you realize that your credit scores, when you're using your tools that are helping you monitor your scores, aren't really going up, right? And every time you look at your statements, like, dude, I went over my 50%. How did I do that? Well, same holds truth when you pay. If you've done some research, a lot of people say, well, if you pay your credit card off, it's probably better to do that. And a lot of people prefer to pay their credit card off, right? Because they don't want to pay interest. And while that might be true, unfortunately, what happens when you pay your credit card off, you might see your credit score dip before it goes up. And so there's like a reverse or backwards effect that goes on within that first 30 to 45 days where you're like, dude, why is it that my scores went down? How is this possible? I'm always paying on time. I don't depend on my credit as much as these experts say that I should. But the issue is that you're paying your credit card off. And while, again, that might be a good thing, let's think about it, folks. How much is your interest? How much are you really using? How much are you really paying towards interest, right? And so the way to help boost your credit, the way to help increase your credit is by following what I call a 30-70 rule. Okay, you want to use no more than 30%. And some of you've probably seen where, you know, there's some experts out there that say don't use more than 28%. Hey man, anything less than 50%. Because number one, as I mentioned earlier, if you pay your credit card on time, and let's just assume you paid it right before the statement cycle ended, you're most likely going to be paying a fraction of the daily interest charges because the interest is accrued on a daily basis. So somewhere, somehow, you're going to be paying that daily interest. And so your 50% threshold might go above what you really wanted it to be, where you really wanted it to be. And so I usually want, and I do this, I use this method personally. It's helped tremendously. Listen, guys, I know what it is to have poor credit. I wouldn't be preaching this if I hadn't gone through it personally. I'm the kind of guy that part of me says, I need to see it. I need to be able to experience it so that I can help others. And so end of the day, I mean, I myself did this 30-70 rule. I didn't use more than 30% of my available credit limit. That's what that 30% is. You leave 70% on the table, don't even utilize it. And a lot of people say, well, why have credit cards, right? Well, to be quite honest with you, if you follow that method, 30-70, 30-70, you're always paying your card, you know, down, not off. I can almost guarantee that within several months down the road, your credit card provider is going to offer you an increase because they want you to use more. Obviously, that's how credit card companies get paid is they make money off interest. And there's nothing bad with that. Obviously, that if it weren't for that, they wouldn't be in business, right? But knowing how to utilize your trade lines, your credit cards, is what's going to help boost that credit. And I can almost guarantee that your credit will go up maybe within the first 2 or most 3 months of you using 30% of your available credit limit. It doesn't matter what collections you might have had. It doesn't matter what charge-offs you might have had. You know, I've seen clients who have gone from a bankruptcy and in less than 6 months, they've got a 700 credit score. And if you're one of them that are watching, please give me a thumbs up. That's a true testament. I've seen it, guys. You know, a lot of people ask themselves, how is it possible that this person went, you know, through a bankruptcy and it hasn't even been a year and they've got a 680? How is that possible? Well, it's because they understand the method behind credit card utilization and how to use it to their advantage, as well as how to make sure that how to make sure that their credit scores are positively impacted and not negatively impacted. So that's a free nugget for you guys. If you want more information, my telephone number is on the top of this post. Give me a call. I'll be more than glad to answer the questions and maybe help guide you in the right direction and how to utilize your credit appropriately. I want to thank Dwight for joining us. Jose Almodovar, thank you for joining us. Appreciate you. Guys, drop a comment below. Maybe ask me a question. Ask me anything. This is open book, open forum. I'll be more than glad to answer the questions for you. I had a question over here from someone who asked me, Roberto, how low can my credit go? How low can my credit go? Well, guys, I've seen scores be as low maybe as in the mid 400s, okay? But per the models and different bureaus, your score can probably be as low as a 300. Okay, and if you're one of the clients that have low credit scores, it just may be because of poor guidance. Unfortunately, someone hasn't really taken the time to review your credit with you and be able to help you understand what areas you need to work on. Because it's just a matter of you working on these areas. It's just a matter of you finding out what items I need to pay down, what items I need to pay off. If you have open trade lines, you know, maybe finding out which trade lines you're perceived as a dependable borrower and you need to start paying it down. And the same holds truth on the opposite. You know, how low can your credit be? Well, maybe as low as a 300. How high can your credit be? It's probably maybe anywhere between 800, 850. Okay, I know that either Experian or Equifax says your scores can be as high as 850. Now, in my career, and I've been doing this 16 years now, in my career, I've seen maybe less than a handful of 800s, okay? And they exist, but this is the percentage of folks that have 800 pluses are very few. And so it says a lot, though. You know, it's a lot of work. It's hard work to make sure that your scores remain strong. So how can you boost your credit? I went over that. You know, utilizing your scores. Utilizing your trade lines no more than maybe 30%. It's not like if you go over 30%, it's a bad thing. But maybe keeping your available credit as close to 70% as possible is what's going to help you. Another thing is, I've got clients who say, Roberto, I have no credit cards. You know, I've been through rough patches, and I just have no credit cards. I don't even want credit cards. Do I need credit cards? And the answer to that is, if you want to have good credit, yes, you're gonna need credit cards. You're gonna need to either get yourself on somebody's credit card who has a low usage on it and always makes their payments on time. That'll help you increase your scores. You don't need their card. You just need to, you know, bandwagon it, if you will, or you need to get yourself a credit card. And if you give me a call, I'm going to drop a link here real quick. You can also visit our website, and I can help you to finding out which areas, which cards you can actually apply for. I'm going to drop the link here. It's myinnovativemlo.com, and if you click on the link up top, says get started, just fill out, it's a quick 30-second form, no social security number required, no credit checks required, and in the comment box just put more info on credit scores. I'll be more than glad to give you a call. I'll know exactly what to talk about with you. I can guide you as to which credit cards you should apply for to help increase and boost your credit scores, especially if you have poor credit. There's a lot of cards out there that are intended to help folks with, you know, getting their credit scores increased. You know, another question that I've been asked is, Roberto, what's the difference between a secured and fully secured credit card? Call me for details. I'll be more than glad to go over the differences between a fully secured, what is a fully secured card, how does it work, what is a partially secured card, how does it work? So three tips that I went over in this video, and I'm just jotting this down so that way if you tend to come back later. Number one, how to monitor credit, your own credit. Call me for details. The second tip was secured versus fully secured. A secured, I'm putting it down here. What's the difference between a secured versus a fully secured card? And the third tip, which was funny because Chris actually mentioned it at the very beginning of this video. He said, Roberto, and I'm actually, Chris, if you don't mind, I'm going to just copy this question because it was like right on point, man. Thank you so much for putting it in there. Was the three credit bureaus, how do we know which one matters most to banks or lenders? Okay. So I dropped that in the comment box, the three tips that I went over in this video, how to monitor your own credit, okay? Give me a call for more details. I'll be able to help you. You could also, you know, if you're not really interested in your scores, but you're really adamant about finding out what's on your credit, there is a way that you can go to www.annualcreditreport.com, and there you should be able to get a free copy of your credit report. Okay, so that's another free nugget for you. Okay, annualcreditreport.com, free copy of your report. Now, I can't guarantee that you're going to get the scores through annualcreditreport.com, but you'll definitely get your report. You'll be able to see, you know, what's what's on it, the discrepancies that you may want to dispute directly with the bureaus. If you're working with the company, again, I would highly recommend trying to do things yourself and working with someone that's going to guide you versus investing hundreds of dollars with a company that, you may not be able to see results till 6, 7, 8 months down the road. Okay. Doing your own research, working with the professional that's going to be able to help guide you and provide you with valuable information such as what I've just dropped down here for you is probably going to be key. Now, granted, there are cases where, folks really just need to work with a credit repair expert. At that point, we've definitely referred our clients out to reputable sources, reputable agencies that I know will help the client and not just bleed them to death with money coming out of their pocket, because my goal is to keep as much money in your pocket as possible, especially when you're trying to buy a house. Because at the end of the day, your goal is to buy the house, right? And there are some expenses that come with purchasing a home. So definitely check out annualcreditreport.com. Get a free copy of your credit report. Give me a call. There are other sources as well that I can help you to be able to obtain a consumer credit report with all 3 credit scores, not just 2, but all 3 of your credit scores. That's also helpful. And then also don't forget to subscribe, guys. Go to my YouTube channel. I'm going to be dropping some nuggets in my YouTube channel so that this way, you guys can also learn more. I just put a video up in YouTube last week. I interviewed Jackie Cavada on the road with Jackie. That was cool. So please subscribe to my YouTube, and I'll drop the link in here for you as well. Okay, click on that link, click subscribe. I want to be able to drop some nuggets for you guys at least once or twice a week with either regards to home loan planning, budget strategies, credit solutions, something like this being one of them where I'll probably go over in more detail. But again, give me a call or click on the link above, go to our website, in the comment section, put credit, and I'll know exactly what to talk to you about. When I call you, I will personally give you a call directly. We'll go over credit. We'll talk about ways to help boost your credit, increase your scores, maybe pay down some items. And it's just in a matter of months, guys. This isn't like years. This isn't like going to your bank and your bank denying you and saying, unfortunately, I can't get you a loan. Come back and see me in a year. Listen, lots can happen in a matter of a year, where if you're working with the right mortgage professional, we can definitely guide you in the right direction. So hopefully you guys found value in this video. Again, sorry for the technical issues that we had early on, but hopefully you guys found value in this video. Please, again, drop me your questions below. Be more than glad to answer them for you. And keep an eye out for, if you subscribe to our YouTube channel, keep an eye out for videos, as well as every Monday, we'll be having credit discussions. Again, I'm not a certified credit repair expert. My job is to help you understand what is going to be looked at in your credit, especially when purchasing a home, and how to boost your credit, do things on your DIY your credit, if you will. And then on Wednesdays, we're going to be talking about budgeting. If you're a first-time home buyer, post-first-time home buyer, new to home buying, I'm going to be talking about Wednesdays how to budget for your home and what expenses might come with the home buying process. And then on Friday, we're going to be talking about planning, okay, and how to properly plan. Everybody has a plan, right? How to plan for the home purchase. So keep an eye out for those videos. Again, like, share, comment below, and subscribe to our channel. Thanks so much for watching, and we will talk again soon. See you later.